Hello everybody, welcome to Online Trading Academy's webinar series. Today we've got a very interesting topic. It's not too often that we get to face a major, significant global change that could impact every market in the world. And that, of course, is Brexit. Now, we've been hearing about it in the media over and over and over again, so you're blue in the face, and I get it. At a certain point, it becomes rather annoying. But remember, we're traders, we're investors, and I see we've got a lot of people on our social media channels out there. So hello everybody. A real quick shout out, Pat says, it's a great day to be alive. Every day is a great day to be alive, but in this period, especially this next couple weeks, it's a fantastic time to be alive as a trader because the opportunity is abound. So what do we want to talk about? I first want to really start off with this cute little graphic here dealing with the removal of the UK from the European Union. And of course, we know that this could be a major change for the global markets, could be very, very significant. But I want to start off with our polls. What did we think as a community was going to happen? So this is one we put out on Twitter. This is from the Online Trading Academy Twitter page. That after the Brexit, will the valuation of the British pound against the dollar increase? 33%. 58% of you said it will decrease. 4% said it will stay the same, and 5% said all of the above. So we've got some college students in here because usually when all of the above is on there, you say all of the above. But most of you thinking decrease at 58%. And the truth of the matter is, it will probably do at some point all of these. We know it's going to go up, it's going to go down, it could possibly go sideways as well. But through the discussion we're going to talk about today, hopefully you will see, I think that you'll get an idea as to where this pound might go a little more clearly. So the other part we did on Instagram was talk about what do you think? Will Brexit hurt the global economy? And there was a great comment posted by Kelly. It says, well, it's unlikely. There will be a few bumps along the road. It's in no one's interest for it to be a long-term issue. From a trader's perspective, potential opportunities. Absolutely, and that's really what we're focusing on right now. I'm going to show you some very compelling facts and figures, which hopefully will broaden your scope and understanding of Brexit, because I think what we read in the mainstream media is just, it's very cut and dry. It's politicians can't agree, this is going to be a problem. And that might be it summarized in a couple sentences. But if we step back and look at the bigger picture, we can start to look at the math, the numbers behind it, and get a greater sense as to how this is going to impact and potentially where. So let's look at this. I know you guys know what the European Union is, but I want to break it down further because you might not know these facts and figures. So what is the European Union? Well, obviously we know the European Union is this great assembly of 28 countries. That's what makes up the European Union. It's the largest free trade zone in the world, which is a major economic powerhouse. We put here that it's helped countries modernize because as a collective group, they're lifting each other up from an industrial perspective. Again, it promotes free trade. You have open borders, which makes things very, very convenient. If you look at all these countries here, there are going to be trade issues going forward should the UK leave. Another one is it's creating jobs. It's a very, very big job creator where a lot of citizens are going from European member countries into the UK and vice versa. So this could be impactful as well. Now, when we have 28 countries and you think of who contributes, the general understanding might be that, you know what, they all kind of contribute. Well, they don't, and I'm going to show you here in a second how significant how, I guess, polar it is where a couple individuals, countries, are really the powerhouses. So why is this an issue? Well, first off, you have this nice cohesive group of countries that are generally working together to rise up. Well, when you take the UK here, which we've got a nice little Union Jack on, and then we look at an example of, let's say, the United States. So most of our viewers here are from the United States. And where is everybody from? I saw I've got Arizona in here. I've got some from India. I saw Denver. I saw a lot of California. We're broadcasting from Southern California right now. So hello, everybody from around the world. The analogy I'm going to make is this. Here's the map of the United States, and I think most of our viewers are from the United States, so you probably can relate to this. The United States functions very well as a global economy because if I need to send something from California to Las Vegas, or Las Vegas needs to ship a good from Las Vegas to, let's say, Miami, there's no problem along the way. It's just a simple get on a truck, train, however you want to get it there, UPS, and send that package. But what if California were to leave the Union? Right? What if all of a sudden California said, we're out, we want to be our own country? This could create huge problems. Of course, you know that the remaining U.S. states would go, oh, you want to leave? Okay, that's fine. But there's no way we're going to let you ship a good from Los Angeles to Las Vegas without paying tariffs. And by the way, if you want your citizens in the new country of California to come and work in, let's say, Oregon, well, you know what? They're going to have to fill out all kinds of visas, immigration documents, and it could get very, very ugly. this is kind of the situation we're experiencing right now and why it might become a little bit stressful going forward. Because if you look at the numbers, right now there are 3 million European Union citizens working in the United Kingdom. There are 2 million UK citizens working in Europe, and this could pose a problem. So if we look at this graphic here, the 28 countries that make up the European Union, it's rather interesting. If you divide the GDP total output for the European Union, and I only have figures going back to 2016, but if you divide that number by 28, it should come out at 3.5%, meaning everybody contributes 3.5% to the GDP. That would be if it was even. Of course, Malta down there at 0.1% is putting out nowhere near what Germany is at 21%. So what I'm trying to illustrate here is how tilted this is to a few countries. Germany, 21% of the GDP. UK, 16%. France, 15%. And then we get into the final double digits, which is Italy. So really, Germany, UK, France, and Italy are the ones carrying most of the weight of the European Union. And you notice here, you have 16% for the UK. Well, what happens if all of a sudden 16% of GDP disappears from the European Union equation of GDP? That, to me, is a major problem out there. Now, if that happens, what do you think is going to shift? All of a sudden, Germany is going to have a much higher contribution to GDP, meaning that the burden will be put more on the German market to carry the European Union. All right. Yes, and there's actually a Brexit vote going on. Well, there's most votes happening right now, and there's actually some conversation going on this morning. So yes, there's a question coming in right now that says, was this recorded before the Brexit vote failed? I have to laugh, not at the question, but which Brexit vote failed, right? Because we had the original vote a few years back, right, to leave the European Union. And then, what was it, Tuesday, you had Theresa May present to Parliament her plan, which of course was shot down for the second time, which raised a lot of contention there between the MPs. They went, you know what, we're tired of voting on the same thing, it's terrible. So they voted on Theresa May's, shot it down. Then yesterday, there was a vote on a no-deal Brexit, and basically saying, this is a vote saying, well, do we want to leave the European Union without a deal? Right? If they leave without a deal, a lot of problems happen. I'll address that here in just a second. They voted that down as well. Now, it was actually rather close. It was definitely much closer, but they voted, we do not want to leave the European Union without a deal. So they're shooting down Theresa May's proposal multiple times. They're also saying, look, we don't want to leave without a deal. But the funny thing is, here we are on the, I gotta look at the calendar out here, my days are off. It's March 14th, the 29th. I have 15 days until I need to come up with a cohesive agreement that all of our political factions in the United Kingdom can agree upon that says, here's how we will amicably leave the European Union. I have to come up with that by the 29th, and the European Union has to agree on that as well. And that's the problem right now. So Tuesday they voted against Theresa May for the second time. Yesterday they voted for the no deal, meaning we're not going to leave the European Union without a deal. And today they're voting on pushing that down the road. And it's probably going on as we speak right now. All right. Yes, and for everyone that wants to know, March 29th, really 2 weeks, is the deadline where they have to come up with an agreement. If they don't, well, we'll talk about that later on in the webinar. So great question. Okay, so the other piece I want you to put into perspective, when we looked at that last illustration, it showed the breakdown of the European GDP construction. To me, this is important because the UK represents 16% of that. That's pretty significant. Here we look at how they stack up with relationship to the global economies of the world. So when we're removing ourselves from just the European Union now and saying, let's look at the world, and this is forecast for 2019 and forecast for 2020. Of course, United States leading the charge here with $21 trillion worth of GDP forecast for 2019. China at $14.2 trillion, and then Japan at $5.2. Now here is where we see two of the major European powerhouses that are driving the EU. Germany, $4.2 trillion, and the UK at $2.9 trillion. So I think we can all agree that it is a pretty big blow to the European Union to lose that much of a powerhouse. And there's other factors out there as well, which we'll look at here in just a second. But that, to me, is just the big piece of it is the UK leaving. All right, so that brings us to our next topic, which is the reasons for this. Why is this happening? I think we could all see some of the reasons out there, but I'm going to start with economics. Now, I don't have a lot of economic data charts to show you, but there's one in particular, and it's just the unemployment numbers. I want to bring this one up because it's generally unemployment data is a reflection of how strong the economy is. Very low unemployment means that there's business and infrastructure going on and people have the ability to find jobs. If there's high unemployment, that means there's not a lot going on and people are just sitting around. So what we'll start with here is the leader. This is Germany versus the European Union unemployment rate. And you can see the gold line up there at the top, yellow or gold line, that is the European Union unemployment rate. Going back into 2009, it was up around 8%. It peaked in 2013 at right around 10.5% and has slowly been drifting down to right now it's sitting at about 6.5% unemployment rate for the European Union. But look at Germany. I mean, Germany is down at 3.5%. I mean, this is a much healthier economy in Germany versus the European Union. And remember, if that gold line up there is 28 countries and the purple line at the bottom is just one, that tells you that they're carrying a lot of the weight. Because if the average for the European Union is 6.5 and the leader is down at 3.5, that means you've got some countries at 10, 11, 12, 14, 15% unemployment. All right. Brandon says the European Eurozone is going to fall apart. Look at Italy. Yes. Well, you know, this is an interesting point, and I'm going to digress for just a second. The reason I think this one's so interesting is when I went over to work in Italy in 2001, I worked for an Italian bank. And they brought me into, I actually went and worked in Spain for a couple of days, and they interviewed me on a Spanish radio station. And they said, well, you're from America. What do you think about the euro? And I said, as a business prospect or as a tourist? And they said, well, whichever one you want. I said, as a tourist, this is the greatest thing ever. Because I felt like James Bond before the euro, right? I have a little accordion file that had my Deutschmarks, that had my drachmas, that had my British pounds, that had my Swedish kronas, all the different currencies out there. It was driving me nuts. When we went to the euro, I was like, oh, it's so easy to move around and you just carry one currency with you. It's awesome. But as a business, I thought it was a bad idea. It looks good on paper as you have all these countries coming together and forming a super economy. But if you look at cultures, you know, no offense to anybody out there, but having lived in Germany, Germans are very precise. They're work. They're closest to American work ethic in European Union that I have found. They are very, very professional workers. No offense to my Italian counterparts, but when I lived in Italy, yeah, we like to work, but ooh, coffee break? And they would love to take some time off and just kind of relax. And it's not that they're lazy. It's just, I would say they have more of an appreciation for living their lives. And then you go to Greece, which is very laid back, right? Greeks really like to take it easy. The point I'm trying to make at it here is, in the United States, we're all Americans. Yes, you might have different accents and be from maybe have different political perspectives, but we all kind of share the same common fiber. If you go to Greece, it's a different culture. Their history is different than, let's say, the UK or Germany. So when you try to put somebody who is very focused on work and production like Germany, and then you have Greece, which is really more about life, enjoying things, you're going to have totally different economic systems there. And it's hard to tell somebody who's used to being very relaxed and taking it easy, get out there and work right now. So you're going to start to create problems. And I thought that this would start to have cracks in the system. Brendan's saying, look at Italy. Yeah, it kind of is similar in Italy. But I think that this is will ultimately be the undoing of it, because you do have ways of life, cultures that are being forced to change to fit the European Union's goal and guidelines. And I think some countries and people will not want to go for that, which is why we're seeing some countries talk about leaving the European Union. All right. Let's go to the next chart here. So first off, we talked about Germany versus the European Union. Now I want to show you the UK because they're the ones that are leaving. In this chart, it's a little bit worse. You notice that unemployment for the UK is slightly lower, but if the number one economy in Europe is at 3.5%, and right now the UK is at 4%, that tells you that there are a lot of other countries that are really doing poorly. So if one of the main dogs leave, one of the main powerhouses leave the European Union, everybody else has to pick up slack, and this could really put more stress on the EU. So this is number one, is they're talking about leaving because of economic data. Of course, we could look at GDP and CPI and all that stuff. This, to me, should probably be number one, sovereignty. Sovereignty, I even said the word wrong. Right, you look back at the armadas of the day, the UK was the global powerhouse. I mean, ruling the world in a way. Well, now they are being told by the European Union, you can do this, you can do that, you can't do this, hold on, we need to talk about this. Then you have the IMF coming in saying, well, you can't do this, can't do that. And then you got NATO going, you can't do this, can't do that. They're also dealing with customs unions and courts of justice that are all for the European Union, which I think you guys can all appreciate. A country as prideful as they should be, as the United Kingdom, is looking at this going, hey, stop telling me what to do. We've been a country a lot longer. We don't need you to tell us what to do. So I think part of the decision to leave here is that sovereignty. They want to be able to make their own decisions about their country. The other part here is the political discord. Now, there are a lot of different political parties out there. You have the Conservative Party, which was absolutely for the Brexit. You have the UKIP, which is the United Kingdom Independent Party. They were for Brexit as well. You've got the Lib Dem and the Labour Party. They were talking about remaining. And then you have this influx of Brexiteers saying, let's just get on with it, move on, get out of the European Union, and go back to the way that we were. This is a cultural thing, and I think it's important when we look at the demographics of how this all split up. So let's look at it by age, because I think this is very telling of what the voting represented for the referendum to leave the European Union. So let's look at it by age. If you do a breakdown, the 18 to 24-year-old, the kids, if you will, were overwhelmingly in favor of remaining in the European Union at like 72%. As you get a little bit older, 25 to 49, it was about 55%. And then from there, it starts to drift down. And you notice once you get 65 and older, most of them were saying, no, we want to we want to leave the European Union. We want to get out. Why? It's an older generation. They're used to having sovereignty. Okay? Now, if this were to be run again, a lot of the polls that I saw actually showed it getting even worse, that the elder generation is more towards leaving, and the youngers are about 82% now to stay in the European Union. So it's kind of interesting the way that this has shifted, but I think it shows you the interest in exiting. Now, Dennis says, IMF wants to become the official currency of the world. Yeah. I don't know. I'm sure they want to influence the currencies of the world because, as we all know, the financial markets are one grossly manipulated system by governments and central banks. And yes, absolutely, the IMF has a hand in swaying those currencies. Who knows if we're going to come out with an IMF currency, but I wouldn't rule it past these markets. All right. Now, so we've gone over the kind of the three things that we look at with regards to why this happened. So I want to show you what happened when Brexit was first announced. I was trading these markets, and it was one heck of a ride. So when it first happened, remember, the foregone conclusion was that this was not going to happen, that we're going to remain in the European Union, and all of a sudden, the votes came in. And as you look at here at the numbers on your screen, it's not enough. It wasn't like a huge landslide victory, right? It was only 16 million versus 17.4 to leave. So it was a slight lean, 51.9%. I'll round it to 52% to 48. I believe if you were to run this again now, you'd probably see a shift towards more remain. It just seems like most people don't want to deal with all the issues and the problems and the soap opera that right now is focusing on the UK. And honestly, as an American, I'm kind of happy that the soap opera is no longer focused on America as much. It's great to sit over here as an observer. Now, Andrew says, too many opinions, not enough logic. I'm hoping you're talking about Brexit, not the webinar. But with the opinions out there, yes, this is the problem. This is not just the problem with the UK. This is the problem with the entire global system of politics. Because you look here in the US, and I'd love to be introspective at times, we could make a policy change here in the US, and a politician may actually agree with it privately, but in public they have to disagree just to be on the opposite side of the aisle. Well, we have two primary parties here in the U.S. You got Republicans and Democrats. And we know that one will say the sky is blue, and they go, the other party knows it's blue, and they go, no, it's not. It's more of a sea foam green. You know, they have to disagree. In the UK, you've got, I mentioned 4 political parties, right? You've got the UKIP, you've got the Labour Party, you've got the Conservative Party, you have Lib Dems. It's a mess. In Italy, it's even worse. There's a dozen different parties out there, and they're complete chaos. The problem here, especially for Theresa May, like I kind of feel bad for her. I don't know exactly what her agenda is to push, but it's almost mission impossible because no matter what she brings to the table, some political party, some of those MPs are going to just disagree with it just because. So let's look at the outcomes here shortly. I'll run you through what I think is going to happen. So from this, the day that Brexit was announced, there was some huge moves out there. For those of you who are Forex traders, you saw probably one of the single biggest moves of your lifetime. The only thing I saw that was bigger than this was when the Swiss National Bank unpegged. That was a huge drop as well. So here's a chart to show you the intraday basis, 5-minute basis of British pound US dollar. It was an 1,800 pip move, 1,800 pip move in 5 hours. That's something you just don't see on a regular basis. This is a huge move to the downside. So for those of you trading Forex, British pound US dollar is 10 bucks a pip. That's $18,000. And the margin requirements have gone up to control a full lot of British pound. It's 5% right now, but it used to be a little bit less. So if you had, let's say 5%, it's about what, $7,000. So $7,000 investment could have made you $18,000 in 5 hours. Of course, that's assuming you're on the right side of this one. We're not emphasizing that you'd capture the whole thing, but there's a lot of volatility out there. 12% move for a currency one day is incredible. Now, let's look at the possible outcomes here, okay? What do we think is going to happen? Well, first off, we start with that Parliament vote. And real quick, let me just go to a couple of questions here. I see we've got a few coming in. There's a lot of good stuff out there. Hamed says, isn't it the standard requirement to be part of the EU so that the country can't get most certain GDP? I can't read that very well. Too many opinions. I can't read that one very well. All right, I'll skip that one. Let's go to the Parliament vote, since I'm having a trouble. My eyes are bad. Parliament vote over here. First thing we had was it was accepted, right? And this is assuming. Let's take a step back and just assume that this is going to happen. Here's what is going to happen going forward from today. If Theresa May's package or Parliament accepts some deal, it will be an orderly exit. What that assumes is that all parties will agree that we're going to have an amicable departure. Everyone says, hey, it's all great. We're going to hold hands, sing kumbaya, and all be friends because nothing is going to change. And there'll be no changes to trade or immigration. Does anybody in there believe that that's going to happen? Does anybody believe that that's going to happen? I'm pretty sure that if you guys, and I know we've got a very active group out there, I'm pretty sure most of you in this room right now are going to go, there's no way that there will be an amicable departure, a totally accepted on all parties agreement with the UK. So let's just strike that one from the record. Okay, I don't believe that that's going to happen. The other part here is that the Parliament vote is rejected. We get a chaotic exit. What that means, I don't exactly know. It could create total chaos in the European Union with regards to trade and business, and I'll show you some examples here shortly of that. Second option would be a second referendum. Now, this to me would be one of the worst things that could happen. If the referendum were to come through for a second time, I think we would all agree that this flies in the face of democracy. The citizens of the UK have voted. Now, not landslide victory by any means. All right, yeah, most people agree there's no logical deal, no way to get the deal. Yeah, I agree with you guys. I think it's pretty clear there. So the question now becomes, if we look at this rejected side, what do we get next? I think it's going to be somewhere between a chaotic exit. They're talking about voting today on a second referendum. It may be happening right now. Unfortunately, we're doing live right now, so I can't really see. And of course, Brendan wants to say yes, just play devil's advocate. Okay, we love you, Brendan. The second referendum to me would be a total slap in the face of democracy and I guess the citizens would lose faith in their political system because they voted for this to happen. And if our politically elected leaders didn't do what they were supposed to do, then why do we have politically elected leaders? I mean, imagine an election over here in the United States where the citizens vote, the election happens, whether it's a ballot initiative or a political office, and a few weeks later you go, you know what, we're going to vote again. We felt that maybe are you sure that you wanted to vote that way? I don't know. It flies in the face of democracy. So hopefully that's not going to happen because that would be a bigger problem than just leaving for the Brexit. To me, that's a confidence in government issue. Now, the other vote would be to put it to Parliament again. Well, I was listening to it this morning and it was actually rather comical. They were slamming these politicians because they're like, we're tired of voting on the same thing over and over again. You can't keep putting the same thing in our face and expect a different result. So give me something different to work with. And that's kind of where we are at right now with putting it to Parliament again. That's what happened on Tuesday. The other part here would be a vote of no confidence, which we may see this shortly. I believe that right now there's a lot of angst against Theresa May because nothing is happening that is moving this ball forward. It got a little bit closer on the second vote, but you might get a vote of no confidence, and then they'll go to elections and elect new leaders that they feel are going to get things done, which is interesting because what I feel will happen is these politicians are going to get to the point now where they go, we have to get something done, don't we? If we don't get something done, I'm out of a job here. And that's their primary concern, is their employment. Last one here would be leadership change. I talked about this, the new leader or prime minister. There's a lot of heat on Theresa May right now that she may be gone here rather quickly here. All right. So here's where it gets interesting, and this to me is why I'm excited about this topic, why I think it's one of the more important ones of the last couple decades, is issues to solve. So of course there's a hard stop or a hard Brexit, there's a soft Brexit, and there's a couple other ones out there. We'll just kind of focus on those. If we go to the chaotic route, so let's assume, everybody, that I'm going to do this example from this perspective. The perspective is we don't have an agreement. Right? We reach March 29th, so 2 weeks from now, no deal is done, no deal is signed, and the UK says, you know what, we would like an extension. And that's what they're talking about as we speak. They're talking about an extension to the referendum, letting us, give us another few months or maybe another year to figure out what we need to do. Remember how this works, so we all understand. The UK wants to leave a club, or a gang if you, I always use the gang, but you know, some people like the word club might be a little more politically correct. So the UK is now leaving a very elite club. And the reason I like to use the term gang, because a club you can kind of leave at your leisure, there's no hard feelings. A gang, you don't leave amicably, right? You ever watch any Hollywood movies, you ever see a gang member leave a gang and it's like, hey, see you later, Steve, hey, see you, Bob, it's been great. No, it's, you're leaving in a body bag is usually what happens in a gang movie. All right, so we use a club analogy. So the club analogy is you have this member that wants to leave, right? And they decide that they're going to take off. Everything's going to be, we're no longer going to be friends anymore. Is that person going to be able to come back and play tennis at the club every now and again? They shouldn't, right? There should be some tension there because their leaving could cause instability to the whole system. And you don't want any other country in the European Union going, hey, well, they just did it. We're tired of it too. I want the drachma back. Greece leaves the European Union. Oh, lira. Oh, well, Italy wants to leave. It creates too many problems. So what you do is you have to play hardball. Now, the UK is voting to extend this, the time that they have to come up with this document that says, here's how we're going to leave. Well, they want to extend it. The European Union does not have to extend. So you have to put yourselves in the seat of the European Union right now. And to me, you have one of two choices. We had a great conversation on Power Trading Radio yesterday with Tim Pessett about this. And the one argument would be, if I'm the European Union and Brexit is taking forever for the UK to come up with an agreement, March 29th, I'm going, I don't care if you guys want to extend it or not. March 29th was a date that's in our law. It's in every document that you sign. That's what we're sticking to. Take it or leave it. That could create some angst. But of course, we know that the contributions from the UK to the European Union are significant. There's a lot of money being paid right now from the UK to the EU. And why rock the boat? So maybe the European Union will cave a little bit. I can tell you that if I was the EU member right now, I'd be going, oh, no, no, no. I am not going to let you guys just waltz off scot-free. I'm going to have a hard stop. I'm going to make it very tough for you to leave to show everybody else in the EU that we are not playing games here. You signed up for this gang, you are not leaving. So how is this going to impact things? Well, right now there's open borders. It's the largest free trade zone in the world. You want to send, UK is making widgets and they want to send those over to Hamburg. As you can see here, well, there's no tariffs. There's no issue sending those. If this is a hard Brexit, all of a sudden, not only will there be tariffs on those goods going to Hamburg, there will also be any shipments going through, have to go through customs and immigration and that type of thing. It could be rather problematic. You have immigration. As I mentioned, you have 3 million European Union citizens that are living in the UK working right now and 2 million UK citizens that are living in Europe. Now, the UK has said, hey, we will honor anybody who's currently living in the UK, we'll honor that, and they can stay there. But going forward, it might be different. European Union says, we can't guarantee that. I thought that was rather interesting. That's the European Union saying, hey, you know what? We're not going to play. You also have travel. I was watching a story about some southern London beach town that basically their whole community died when the European Union was created. And the reason for that was aircraft now, it's so cheap to fly from London Stansted Airport to Italy. When I lived there, it was $19 to fly from Italy to the UK on Ryanair. Of course, no bags or nothing. That's each way. But hey, you know, 40 bucks, I've got a weekend getaway to London. Why would I want to spend a bunch of money and go to a beach town in London when I can go to France or Germany or Austria or Netherlands? That made it so cheap to travel. Now, there's going to be extra tariffs on the airplane. There's going to be immigrations and customs and checkpoints you're going to have to go through. It is going to be a pain. They're talking about massive lines to get shipments of stuff from Brussels through the Channel to London. This is going to create a lot of issue. You also have Northern Ireland, the backstop, right? The Ireland is in the EU. Well, Northern Ireland is part of the UK. So if this does end up being a Brexit, they're talking about having a wall right there. Gee, this sounds rather familiar. But this one's going to have armed guards and towers. They don't know what's going to happen. So part of this agreement now is what's called the backstop, which is really a little bit of a, not a loophole, but a kind of a fail-safe they're trying to put in. It says, look, there'll be no customs, no issues between Northern Ireland and Ireland. Well, a lot of people are disagreeing with that because what's the point? If you still want to have these rules that were in place when you're part of the EU, then stay in the EU. If you're leaving, you're going back to different rules. So this is another area of contention. Is Norway, yeah, Norway is EU. Norway is EU. I see Liz, is Norway not a member of the EU? It is a member of the EU. Denmark is not. Okay, so last part is going to be tariffs. And this is another big one because the cost of goods and services, we all know the tariff war. We're dealing with it right now in the United States. We're dealing with it right now in other parts of the world. This could be a much bigger issue because the tariffs for goods going from the UK to Europe or vice versa will rise significantly, which means ultimately that the people, the citizens that are buying those specific goods and services are going to pay much more. The argument is that this is actually good for certain businesses and very harmful for others. Keep in mind, there are a lot of businesses from the United States who have set up operations in London, in the UK. Why? Because if I open up a business, a shop in the UK, I can now do business with Europe free. I can send all my goods and services over there to Europe without it being an issue. Well, remember, and why would I go to Germany? Because, well, the UK, they speak English. That's great. It's easy. So these are all major problems. Brian says Greece leaving might bring the UK back. I don't know if it's going to bring the UK back, but I do see if this does go through with the UK and they officially do sign these documents and they decide to leave, I could totally see other countries saying, you know what, we're going to leave as well, which again would start to fragment. We've actually had economists on powertradingradio.com who one of the guys said, one of the things I see happening is that the German market is going to leave the European Union. And that would just basically crumble the whole thing and come back to the Deutschmark, which would be a very interesting piece as well. All right. Andrew says, do I see any real end game for Brexit? Good question. Before I get to the opportunities, let me answer that question. That's a great question. Do I see an end game? Well, there's obviously going to be an end game. My concern is what they're going to do is they're going to run another referendum. They're going to say let's remain, and then they pull all this out, and the whole world's supposed to just pretend the last 2.5 years didn't exist. I believe that they should do what they said they were going to do. It's all a hypothesis at this point, Brian. I can't really say exactly what is going to happen. I mean, nobody can. But the politicians should go forward. I do think that they will ultimately leave and have a Brexit. I don't know how it's ultimately going to turn out. I don't know whether it's going to be amicable. I can't imagine it being a super friendly thing. Therefore, there's going to be issues with these countries going forward. So I can't answer that one, Andrew. I don't know. Why doesn't England use the euro? Great question from KK. Well, that is a question of sovereignty, right? This is Queen Elizabeth we're talking about. I bet you there was a discussion that said can we put Queen Elizabeth on the 500 euro bill if we decide to use it? No? Okay, we're not doing it. No, here's one of the reasons why. And personally, I think it's a good choice, just from an economics perspective. You can't manipulate your currency if you're part of the EU. You have to let the EU manipulate the currency for you. So the UK, they can monitor and fluctuate their interest rates, their Fed funding rates. They can do quantitative easing to help their economy. So it gives them a much greater power and influence over their own economy to have their currency. If they're using the euro, could they all of a sudden cut interest rates? They would have to have the whole European Union agreement. And think if the UK started performing poorly, but the rest of the EU was doing great, well, if they're using the euro, they couldn't do anything. They'd have to like beg the European Union to help them out, and I think that probably not. So I think it's a sovereignty issue, I think it's a pride thing, and I think it's a control issue, which is part of the reason why they're leaving the European Union. All right, let's talk about where the opportunities are, and there are opportunities abound. First area we want to look at is really the equity markets, okay? The equity markets here it's a challenging play because you really have to do your homework here. There are a lot of major companies out there that do business globally. Main one I can think of would be HSBC, which is your ticker symbol in the top column there. You have HSBC, you have Royal Dutch Shell, you have BP, Royal Bank of Scotland, Barclays, BHP Billiton, Lloyd's of London, GlaxoSmithKline, Unilever. These are all companies that are doing major business internationally. I think Unilever could actually start to face a big hit if they manufacture a lot of their products in the UK. The good news for Unilever is that's just the headquarters. They have factories all over the world, so that's probably not going to be impacted as much. So you have to dig. There's a lot of issues with specific companies. Now, I'll show you a few here in just a second that I think might have the biggest impact. What you want to do is focus on U.S. companies operating in the UK who are using the UK as a portal to the European Union, because if the UK leaves, all of a sudden that portal is gone. You also want to focus on British companies operating in the USA or globally. Again, these are going to be generally big financial institutions, banks. Met M says, will BP do better if the Brexit does not happen? Yes, I do believe it will do better if Brexit does not happen, because if the Brexit happens, remember they're a mining and mineral company, of course. A lot of BP Billiton is in Australia, so it's kind of split there. It's not totally the burden on the UK, but the headquarters is. So when you have more free trade and open borders, it's easier for them to sell their wares. So they'll be, if not, they're going to have to add on tariffs, and it makes it a little more challenging. Last piece here is the Forex markets, and I think this is probably where the greatest opportunity is going to be, although it's going to be the most dangerous. So let me show you what happened here with the Brexit. Now, here's a chart going all the way back into 2015, and I took this one a couple days ago. This is a weekly chart, and you can see back in 2016 this huge red candle here, right? This is the day that Brexit came out. Here we go, got a little cursor on the screen for you. That is the Brexit day. What I want to do is show you, lining that up with three companies here. You've got on the top, Royal Bank of Scotland. In the middle, you've got Lloyd's Group, Lloyd's of London, and at in the bottom, you've got Barclays. These are all financial firms, and I ran through 100 different companies out there trying to find out which ones were the most correlated and had the most influence. And you notice that all four of these charts look almost identical, right? They all look very, very similar. They both took the same hit on Brexit. So these are all bank stocks. I think the banking stocks are probably going to be the most susceptible to currency fluctuations. Of course, we all know that there has been some massive swings over the past couple weeks in the British pound, and rightfully so. Other areas you can look at would be the futures markets. Of course, you got the British pound futures. There's also ETFs if you want to use an exchange-traded fund to trade the British pound. That'd be EWU. There's a couple of other ones out there, but EWU is probably the most liquid. As far as individual companies, though, you're going to have to do your research and dig. I just spotted these ones as being very clear correlations to it. Probably the most closely related one there is the Royal Bank of Scotland on the top. So if we start to see that the British pound is going to tank, there's more contention and issues with this breakup, you'll probably see the British pound slide. Well, maybe shorting Royal Bank of Scotland or Lloyd's or Barclays could be an opportunity for you out there. And again, I just love this chart from an intraday perspective. It's very rare that you see such huge moves on a short-term basis. And the final slide here, at least for the chart perspective, really shows you a lot of volatility. And you might not see this. For those of you who don't trade Forex or currency markets, I think that you should look at that because there's a lot of opportunity in it. This thing's been moving 30, 40 pips a day, and in the last couple days, we had a 200 pip down day, we had a 350 pip up day, and again, look at it, it's about $10 a pip. So there's huge opportunity out there right now in the British pound. The key is, the dangerous thing is it's extremely volatile. There's a lot of crazy moves that could happen. Question came in. It's not in the EU. I could have sworn it was. Okay, someone corrected me. I thought Norway was Denmark, Sweden, Norway, Denmark. I know Denmark's not. I could have sworn Norway was. I don't think they use the euro, but I thought they remember the EU. I might be wrong. Other question was, is Brexit good or bad for the S&P? I think it's bad for the S&P. And the reason I think it's bad is because a lot of our companies are multinational, and they're doing business all over the world. And it's maybe not bad permanently. I think it might be bad for a couple of years until the dust settles from all this, because it's so many unknowns. And as we all know, especially for those of you who are Online Trading Academy graduates, we talk about this a lot. Biggest thing we hate in the markets is the unknown aspect of not knowing what's going to happen. And if we don't have an understanding of how this is going to settle for Europe, then I think that creates even more problems for the global community. Because how are we now going to adapt to the UK's new laws or the European Union's new laws or rules regarding the UK? So it's just a reshuffling of the deck, and it's kind of, I think, will be harmful for all markets until we figure out how to play the game, how the new game is played as these countries kind of step apart. Of course, if it does happen, keep in mind, we'll have to wait and see if somebody else does follow suit. There's a lot of countries out there in the past that have talked about it. I believe there was one asking about, was it Catalan? I don't know the specifics of the Catalan market out there. I know that Spain has some issues with the little northern border part, but that's beyond my scope of understanding at this point. All right, well, I guess I'm totally wrong. I see someone says Denmark is in the EU. I had them backwards. I got dyslexia with my Scandinavian countries. Sweden, I can assure you, though, they're in the European Union. Oh, all right. That was a quick overview of what to expect out there, and I think that there's a lot of opportunity. I think that for those of you who are in the markets right now, I think we'd all agree there's going to be an increase in volatility until this happens. As we get closer to that March 29th deadline, that to me is where it really is going to start to go crazy. So if you are trading the Forex markets, be very careful. Don't overexpose yourself. You can make a significant amount of money with a very small lot, a very small amount of shares. I would encourage you that if you aren't in the currency markets, you might want to learn about those. They are going to present some great opportunities. Of course, you futures traders know you can be looking at the British pound futures, which have also been very wild lately. I would not be surprised to see in the coming days an increase in the maintenance requirements, the margin requirements for British pound futures as well, because as we approach that March 29th deadline, having a 200 pip day, 300 pip day might be commonplace at that point, because one day it looks good, next day it looks horrible. That is going to be the norm going forward. So that's kind of our overview here and our perspective from Online Trading Academy on the Brexit and what it means to traders and investors. It does mean opportunity. It does also mean a lot of risk. You know, it goes hand in hand. We always say this in our classes. You cannot have more gains or more opportunity without taking on more risk. So this is an environment. Some of you may want to shy away from it altogether. Great. If you're risk averse and don't want to get caught off guard by some of these moves, I would encourage you to stay away from it. But for others, like myself, it's just one of those opportunity times where hopefully I'll be capitalizing on this, using supply and demand methodology and making the best trades that I can. So that will do it for the main webinar here. I'm going to spend a couple minutes and just go over a couple listener questions. I see some more coming in here. Doesn't the USA have a trade agreement with the UK? That's Dennis. I know that there are some trade agreements. I also know that right now President Trump is negotiating new trade agreements, and he's playing hardball as well. It's kind of interesting. He's really talking tough talk with the UK, saying if they don't want to make trade agreements and come along with us, then we're going to make some aggressive action. So I don't think that's the major impact right now for the UK. But yeah, we do have some trade agreements. I know that we're talking about renegotiating a bunch of that. Of course, I think we're renegotiating trade agreements with every country in the world. How long has the European Union been in existence, Matt? Boy, I don't know. I want to say the original concept goes back decades. I know that the euro, the currency, switched over in 2001. But as far as the collective group of EU, I'm not sure. The number 76 sticks in my head, but I don't think that's right. It's a long time ago where they started building the European Union. So unfortunately, I'm not the big expert out there. Yeah, great questions, guys. If you have any more, I'd appreciate it. Brendan says crypto for life. High volatility for sure from Linda. Yep, absolutely. Brendan says position sizing equals the ultimate risk management. Absolutely. You know, one of the things we focus on in our classes is a lot of risk management. Don't go into, if you're trading the euro, if you're trading the pound, if you're trading the futures markets, I would say scale back if you're trading anything to do with the UK right now. Cut it back into maybe half your normal size. I think that's it's a dangerous thing to be trading the normal way you do in an environment where volatility is 2, 3, 4 times normal. All right, cool. Well, thanks, everybody. I hope you enjoyed that one out there. We'll have more comments on this one at Power Trading Radio. Of course, I would encourage you, if you'd like to learn more about how to capitalize on this type of market environment, how to use options, how to use futures, how to use Forex markets and currencies, and use those instruments together to hopefully get a greater rate of return out of this great volatility, there's a link down below that will lead you to a free class. You can simply click on that one. It'll tell you which of our 50 campuses around the world are nearest you. Each one of those has free classes, paid classes, and much more. And it's all designed to help you understand how to take advantage of moments like we're seeing right now, which are almost once-in-a-lifetime experiences. That'll do it for today, guys. Thanks so much for joining us. We'll see you soon.